Hey there guys, in this lesson we are looking at stops and targets, and we'll be looking at where to set our stop losses and where to set our take profit targets. Right, so we'll start with where to set a stop loss. Let's look at a case when we are buying in the markets. Assume that you saw an opportunity to buy. The first thing that we know obviously is the fact that when we are buying in the market, we are anticipating that price will begin trading higher, right? So we want to set our stop loss below the level where we bought, where we entered a buying trade. We want to have our stop loss below. And it's important to note that when you set your stop loss, do not open your stop loss too wide, because you don't want to lose too much if you are wrong about the direction of the market. In a case where we are selling, we want to place our stop loss above our selling price, right? So we want to have our stop loss up there above our selling price, because we know that we'll be profitable as the market trades lower and lower. The same applies. You don't want to open your stop too wide, because you don't want to lose too much in a case where you are wrong about the direction of the market. Let's look at where to set our take profit. When we are buying, we know that price should trade higher, so we want to set our take profit level above our buying price, right? And if your stop loss is, for example, 50 pips, you want to set your take profit maybe at about 100 pips, right? So your take profit level has to, or your take profit has to be wider compared to your stop loss, so that you make more money when price trades in your direction. In a case where we are selling, we want to place our take profit down below our selling price, and we want our take profit to be, let's say, 2 or 3 times wider than our stop loss, right? So if your stop loss is 50 pips, you can have your take profit at 100 pips or 150 pips, whatever it is that you desire, but your take profit target should be above your selling price. Let's look at risk management. Whenever we look to place a trade, we want to make sure that our target is always bigger in pips than our risk, right? For example, this is something similar to what I spoke about, or exactly what I spoke about earlier on. If our target is 50 pips, then we want our risk to be 25 pips, right? Our risk to reward ratio in this case will be 1:2. So you can use a risk to reward ratio of 1:2, 1:3, 1:5. The more your profit, the more your profit, the better. The more your reward or your area of reward, then that's the better it is for you. So in this case, or in this example, we used a risk to reward ratio of 1:2, with your risk being at 25 pips and your profit target at 50 pips. This kind of risk management helps us make a lot of money in our winning trades and lose very little in our losing trades. Now let's look at an example of that, and we'll be using the 10 trades example. Let's assume that we began trading with a $1,000 account, right? And we placed 10 trades over a certain period of time, right? And of the 10 trades, we only won or profited from the first 4 trades, right? So each trade we made a profit of $100, right? The remaining trades after that, 6 trades, we lost, right? And we were losing $50 per trade, because we are using a risk to reward ratio of 1:2, right? So we are losing half of what we make. So we lost $50 in our 5th trade, 6th trade $50, and we were losing up until we reached the 10th trade. Look at how you are able to profit regardless of losing 60% of your trades. If you calculate how much you made in these 4 trades, it amounts to $400. And how much you lost in these 6 trades amounted to negative $300. Now $400 minus $300, that means that you would still have a total profit of $100. It means your account would still be sitting on $1,100 and you would have been profitable regardless of the fact that you lost majority of your trades. So this is how it helps having a tighter stop and a wider profit target, right? It helps you survive in a case whereby you lost majority of your trades. Your account is still able to thrive. You know, you will not really blow out your account regardless. So yeah, we have reached the end of our lesson, and until we talk again in the lessons that will come, this is Forex OGs, and we are signing out.